Well, we're back. It's PK here with our first episode of Out of the Box back here in America. We were gone for a month, 5 weeks in Europe. Nothing like America, you guys. So anyway, I want to welcome you guys out of the box, living out of the box. And let me get the glasses off. Forget that, you can't see a thing. So much better. I can't tell how happy I am to be here in America. Believe me, all of you should feel so lucky and so grateful. We are living in the best country in the world. Enough of that. So anyway, what are we going to talk about? I got my notes here so I can try to keep it short. I don't ramble on too much. Let's see here. The name of the episode today, our first episode back in the States, back here in the Florida. Of course, it's been cloudy every day. There's no sun. The name of the show is... What is the name of the show? What the hell is the name of the show? Oh, of course. Trading the stock index futures. Oh my God, it's the stock index futures, which we all love to trade. Big volatility, and I'm going to tell you about it. So first of all, let me get on this. Let me give you a little introduction. First, I'm PK, as you know. I'm 61, so it could be 62 in August. I started 35 years ago, and in fact, during my first job, when I went over to Bear Stearns, my second job, I happened to be there right when they started the S&P 500 stock index feature. There was no other feature at that time, a stock index. They're thinking maybe this will be the next thing, next big thing. And as we know, it turned out to be true. And I get asked sometimes, because they still trade the big one, I get asked, okay, PK, how big is it? Well, one S&P 500 stock is equal to 5 minis, 5 ES. So they give you an idea how big it is. And not only that, I traded in tenths. So that's what happened. So what I want to tell you before we go on is PK has been around and I've seen a lot. Anyway, so number one, what are let's talk about the three stock index future markets, the pluses and the minuses of each, okay? And I'll try to keep it short. Look, I've already gone 3 minutes. I'm out of my mind already. Number one, of course, we have the ES, the mini S&P. This is the gold standard. Everybody dreams, has the big volume. We know the huge volume. This is, of course, one of the pluses. Very easy to get in, very easy to take a very big position. You don't get screwed on your stops. Yeah, whether you're going to get the bid and the ask is I think those days are long gone. But the thing is, everyone follows this around the world too. This is really the ES 500 stock index future. This is the gold standard that everybody uses as a metric. And I think, besides the fills and putting a stop in, it's very rare. It's usually the spread is 1 tick. Yeah, when it gets wild, it's 2 ticks. Have I seen it go 3 and 4 ticks? Yeah, maybe when the VIX is in the high 30s and 40s and 50s during the virus crash last year. Anyway, so I don't really see any real negative in trading the ES, except maybe the tick size because it's 1250. But that's me, So for all of you, of course, everyone dreams to trade the ES. You can trade one, you can probably throw in 50, 100 lot with no problem, maybe even more. I don't know. Never made. I usually trade 4 to crack, and have doubled up to 8. I've never tried to put on 10, 20, 30 at the same time. So I don't have that experience. Maybe some of you can answer that question for us. Okay, number 2, which is, what is number 2? We have we have the Dow futures, the YM as they say, the mini Dow futures. And for me, I happen to like this. I think for you who are wanting to learn how to trade the stock index futures, I think going to the ES is a mistake. Again, this is PK's opinion, but again, the reason is it moves slower. Yes, it's much thinner, and I'm not talking about the opening either. I'm talking about during the normal trade, and it trades intense. Every tick is, I think, what is it, $10 a tick? I think so. Yeah. But I think this is of the three, the ES, the YM, and the NASDAQ, the NQ. I think this is the best one to learn on. I think all of you making a mistake, go to the ES later. But I like this better. I think it's one, as I said, easier to get in. So this is it does have good volume. It's not like it has no volume, but it's the easiest to learn especially if you want to be a day trader. Let me see what else on the YM. Oh, okay. Yeah, that's the only negative is maybe if you're really big and it's hard to get in, and yes, it can move on the opening, but let's face it, that first 15 minutes when it opens, all of them are wild. They're not so easy. So number 3, which is the real mover, which is the NASDAQ, the NQ. And okay, PK, what's the deal with the NQ? I'm going to tell you right now, from all the years' experience, number 1, for you day traders, right? Or if you have a momentum style, this works best for that because you have much more volatility. That NQ can move 20, 30, 40, 50 points in minutes. And remember, it's $20 a tick. 50 points is $1,000 for one. But to me, I think, that's the positive. But I would tackle the NQ, the NASDAQ last, because this takes, in my eyes, the most skill. On the downside, remember, for me, I don't care what it is, gold, silver, stock index futures, the ES, whatever, crude oil, it's about can you blow yourself out. And one thing about that NQ, about that NASDAQ, you jump in long or short, it can get away from you quickly, even quicker than you want to place a stop on the computer. So this is something, you should only, if you're interested in, making this fast money, I'm talking about your day traders, it's really for the day trading. Of the 3, I'd be practicing on the NQ. But you better be able to throw out those losers quickly, because this is the fastest way to going broke and blowing your account out, is in the NASDAQ. So bottom line, that's where we're at. Those are the 3, the NASDAQ, the YM, and the ES. You saw I ranked them. For me, I ranked them. Start with the YM, go to the ES, and if you're good and you really can do it, meaning to the downside. Remember, I'm not talking about picking them. To me, the trading is about how you handle yourself once you guys push that button. This is what it's about. How do you handle yourself when they go against you? Especially, I got other trading videos about this, how to handle yourself. Especially after losing 3 times in a row. This is I found the real deal. It's not so easy to make that 4th trade. I mean 3 times in a row in one day, maybe in 1 hour. Then we'll see how well your discipline is and how you can follow a plan. Because this is when most people throw out everything and really get themselves double up, triple up, bet bigger because they want to make it back for all sorts of reasons. So anyway, look at this. 9 minutes. See if I can wrap this in 40 seconds, in 10 minutes. My overall conclusion about PK, what's it like trading on the stock index futures? What are the best tips? Here's my conclusion. Number 1, as I said earlier, the NASDAQ is best if you're a day trader. Once you're going to hold it overnight and take positions, then it doesn't matter. But if you're looking for the biggest bang for your buck, this is the way you want to be. Number 2, as I said, again, these are all day trading tips. I think this momentum, whatever that is for you, a momentum strategy, I feel is the best way. Versus trying to buy dips, when it's coming down. I think when it's going for you, because the NASDAQ's so wild, if you can catch it, you can really make a lot of money. And number 3 is one thing I didn't mention in the video. I'll say in number 3 of my conclusion about the S&P. If you're looking to sell some options, I did this for maybe about 6-8 months many years ago, selling the combination 150 points away, 100 points away, whether you want to sell calls. You can even say it's maybe like buying a covered call, buying a SPY, and selling the call, the stock and the ES call above it. But I think one thing that's good about if you want to get into the options on the S&P, on the ES, this to me is worth looking into, depending how good how good analysis you are, and again, at least in the ES, there's enough volume, at least you can maneuver in those ES options. So that's something I would take a look at. Oh, one of the benefits I forgot to mention to tell you is one of the things that you see all the firms do, they have these day trading margins. Some, I know I'm with TradeStation, they give you 25%, but I've seen these margins for the indexes, $500,000. Of course, it's a take. I'm not saying you should do these things, but one day, if you really are good, you don't, as you say, you don't need to have so much money. This is why they do these things, to hook you into opening up an account. Look, TradeStation, they don't have this $1,000 margin, but I see a lot of the firms they do. And again, if you're able to do some momentum style or whatever style you use with some very close stop, and you're able to get that stop in time, this is everything. This is the problem. That's something you want to consider. So anyway, said enough as usual, going over too long, but I try. If you, of course, feel free to write me. I do get, you can't imagine how many I do get questions. Not on the interesting thing, I told this before, not on my channel. People write me on my Facebook. They want to friend me. They want this. They want help. What do I do? I mean, I understand it. Well, I wanted the same thing. Nobody wanted to help me. And I'm not talking about mentoring. I'm talking about just some general tips, and this is why I'm trying to do these videos. So again, if you have any questions about this, about trading the stock index futures, or I went too quickly, or you can't understand me because I'm slurring my words, which I can't stand, and anyway, feel free to write me. So this PK with our first episode here in Florida, back in America, for out of the box, living out of the box. Ciao, everybody.